This is Market Week Live, December 22nd, 2023. Information and support for traders and investors. Welcome to you all. Reminder to our members, questions should go in the Q&A regarding anything that you have on futures or equities, and we'll be talking about the indexes at the end of the show, so you can feel free to put those in there. Anybody watching us on YouTube, you would need to be a member and invited in here, a premium member, to be able to ask questions. So keep that in mind for next time. Have a little legal to do. All the information that we provide at askSlim.com is for entertainment and educational purposes only, not to be construed as investment or trading advice. The sole purpose of this website, anything oral, written, or anything that we may provide in video, is to provide you with information that could be used along with discussions with your investment advisors. All investment decisions should be made by consulting your own plan, your own trading plan, or with your own investment advisors. And you can see our full disclaimers and legal information at askSlim.com. This is our hosts, amazing team of analysts. We're operating without Katie today. She couldn't be here, so you have the three of us. I'm Steve Miller, been a trader for almost 50 years. Matt's been around for a couple of decades, as have Arvi. We've worked together for a very long period of time, and we're starting to really think as one mind, which is sometimes scary. Great analytical team that we have. You can go to askSlim.com, about askSlim, meet the team. We have interviews in there, and you can learn a lot about us and about some of my history, starting way back on the CBOE floor in May of '74. So in case you haven't heard me say it before, May of '24 will be my 50-year anniversary. And I think we're going to have a big bash. So if one of you wants to hold a party for me, like in Las Vegas or something, let us know when to come, and we'll be glad to be there. So, all right, let's move ahead. You have any information you need from us as a member, or if you want to become a member, membership issues or website issues or questions, write to team at askSlim.com. If you want to know anything about our analytical approach, our analysis, our one-time specials, or if you want to upgrade, write to Matt at askSlim.com, and we'll be able to send you all of that info. Make sure you go to askSlim.com, go to Snapshot Lite, and become a free member, and you will be able to get our information daily. It'll be emailed to you on the S&P 500. It's just a great way to get a feel for who we are. On YouTube, subscribe to our channel. If you're watching this on YouTube, click the notification bell, and you'll get notified when we put up videos like this video. Give it a thumbs up. On X, follow me at askSlim. And any questions that you might have, write to Matt at askSlim.com. All right, coming up, I'm going to give you my opening comments on the market. It's kind of brief today. And then we're going to have, again, all of our hosts that are here, three of us, are going to take you through a trade planning session, and you're going to really enjoy this. We did this 2 weeks ago when we were live and had a lot of great comments on it, so people love seeing our analytical approach. You will see how we take that analysis. It's really looking at multiple time frames, multiple studies, and use that in our trade planning process. I think you'll really enjoy that. Matt's going to show you, once again, give the gift of askSlim. You can give the gift of askSlim to somebody who loves trading or technical analysis, or to yourself. And if you're already a member and want to upgrade, we will then provide you with a refund if you're already a member, and you can then upgrade that way. And when you give the gift of askSlim to yourself or somebody else, we're going to give you a gift back and send you an Amazon gift card. Then we're going to have our express round, and I see questions coming in right now from our members for the Q&A. We will answer those questions. Again, the indexes we're not answering right now because I'm going to do a pretty deep look at that as we get into the stock market analysis. So put your questions in Q&A. Then for the stock market, I'm going to take you through the Russell, the NASDAQ, the S&P 500. We're going to look at our level 4 charts in all time frames, all studies. Plus, I'm going to take a historical look at overbought, oversold conditions, and I think you're going to find this to be illuminating. All right, so let's move forward in here. If you want to know how to watch this show, well, premium members are sent a link to participate. And then you come in and you can ask questions. That's level 1 to 4. Free members, non-members, you can watch this on YouTube at askSlim Team channel, where we are live right now. And of course, we will have replays available to you. All right, so this is my opening commentary on the market. Well, stock market investors did a great job this week, actually, keeping the surge going now for what is the 8th week on the upside. That was despite a huge drop that we saw on Wednesday, with the S&P 500 diving 88 points from its peak that day. That was a big decline, ended the day down about 70. There was really no news. People are blaming it on some option selling, some big orders that might have come into the market. And maybe it was just the stock market was extremely overbought. And I will show you that in a couple of charts later on in the show that shows that the stock market is very overbought and that it is likely to have a little bit of a correction in here. I'll show you some charts on that I think you'll find are interesting. Even some bad earnings this week really couldn't stop the stock market rally. FedEx, FDX, Nike, NKE, both had plunges of around 11% in a single day. Even that Nike move here today on Friday still could not move the Dow to the downside. Well, maybe. It's been bouncing back and forth between the upside and downside. So see how that ends up if any selling comes in late in the day. Usually markets are pretty slow at the end of the day on Friday before a 3-day weekend. So maybe not a lot happens here at the end of the day. We're going to have to see. And help came Friday also for the markets as the Fed's favorite inflationary indicator, that's the PCE deflator, that came out below what was estimated. And the PCE core year over year was up 3.2%. That's the lowest actually since April of 2021. So with the headline number month over month down 0.1%, and it was expected to be up 0.1%, the market liked it, and the bids came in for the market as the disinflation that's going on continues. For the stock market, our analysis has remained positive as we have continued to show that our indicators pointed to the upside. Our cycle analysis has been in positive configuration. All of everything we look at has remained positive. My early year estimates called for a peak in the market significantly lower than this, even though we were looking for a bull market year. But the market was much stronger, and certainly credit goes to AI as it lifted significantly those stocks that are heavyweights in the markets. And that has certainly helped the indexes to move up very, very significantly. The Dow, the NASDAQ, all-time highs. S&P 500 not far, and our upper track analysis, and I'll show you what that means later on, pointing to the S&P 500 also making a new high. Now, you heard about that bullish stuff that I just told you. Well, it's hard not to pay attention to the huge valuations that we have in the stock market right now. In the investment world, ebullient with talk of rate cuts, soft landings, and victory by the Fed. I love that word, ebullient. Use it whenever I can. It's also hard for me to forget the late 70s because I was trading at that time. Yes, I've traded 9 bull markets, 8 bear markets, 4 crashes, traded all of those over these last 50 years. And it's hard for me to forget certain things. And I remember that period in the late 70s, early 80s, when the Fed pretty much thought that they had taken care of that inflation. And then they just stopped too soon, and inflation absolutely roared at that point. And it's hard also for me not to remember that, back just in a decade or so ago when we had inflation at 1.5%, like that wasn't good news. The Fed had to get it to 2%. And of course, they got it to 9%. So the Fed isn't very good at what they do. Disinflation that's going on now is clear, and that may be cyclical. Remember, when you have a big move on the upside, like 9% inflation, it makes sense that there's going to be some cyclical move when it pulls back. And the big thing is that when markets really begin to anticipate that the Fed is going to cut for real, and I think they're going to cut next year also, maybe by mid-year, then the commodity markets, they're going to surge. And I will be talking a lot about commodities as we get into next year. I showed some example of commodity indexes in the last few weeks, and I believe that the upside strength that we're seeing in the gold market and the breakout that we saw, which yes, pulled back, looks like it failed, but strength coming in again, all of that is about the fact that the Fed is going to be easier and inflation is going to come back, and that's going to stop the Fed. At least that's what I believe, because I remember all that history. And lastly, we're looking at a stock market now that's become a little bit sloppy. You don't get 88-point downside moves, that kind of an air pocket, unless something is changing. And even today, when the market was moving up, all of a sudden it started to get some weakness here on Friday, but it's still up on the day. But I say, the bull's not over. I'm telling you that right now. And we're pointing to higher highs as we get into next year. But for now, I think there's corrections ahead. I'm going to show you some evidence that supports that as we move forward. Stocks for the week, well, the Dow's up fractionally, S&P 500, about 1% to the upside, maybe a little less for one of them. There were also gains about 2% as interest rates move down to a cyclical low level right now, getting down to about 3.9%. That helps the small caps because they're zombie stocks that don't earn any money and borrow a ton of money. So once the interest rates move down, you start to get people buying those small caps, and that's what's got the market moving up. So the bond market gained small for the week. TNX, the 10 years down a couple of basis points to about 3.91% right now. And the low for the week, 3.83%. Our projected low for this move was 4.06%. So it has done significantly better than what we had expected. Gold up about $38 on the week, silver up 45 cents. And those miner stocks, those miners are starting to look better to me. I've been a buyer of the miners for quite a number of weeks in here, maybe into months, and have been accumulating those, and I'm happy about my positions in there. Dollar down 0.8%. Of course, that's about interest rates going down here in Japan. Is also doesn't want to change their tune when it comes to their interest rates. So, but I think that the dollar is going to rebound in here soon. And I think that's about the interest rates rebounding also. I think we're going to see a stronger dollar into February as yields bounce. And that's probably going to give us even a buying opportunity in the metals markets when that happens. Oil up about $1.80 on the week. This is mostly about the cycle patterns, I'll tell you, because we were looking for a rebound to come up to about $75 to $77, and we are getting that. But then, of course, the Houthis are sending drones into the Red Sea, and it just so happens that they must know about our cycles because, well, they're all getting shot down. We don't want anybody to get hurt out there in the Red Sea, and we don't want that war to continue. We want that all to get solved. But in the meantime, Iran says they're sending ships into the Straits of Hormuz, and that kind of news always firms the oil market. So that's what we have been seeing this week. That is my opening commentary. I hope that you loved what I had to say, and we're moving into this great session right over here as we talk about our trade planning with the askSlim team. All right, so I'm going to start this out by looking at Baidu. What we're doing in here is taking our analysis and then using that to talk about how we look at the analysis and what our trade planning is based on that analysis. So I'm going to start it out looking at Baidu with some comparison to the Chinese market FXI, and that's a long intermediate outlook. And Arvi is going to look at Oracle, which is a short-term outlook, and then Matt will look at FCX, which is a long and an intermediate outlook. So, Arvi, did I say that's a short-term outlook? All right,
Yep.
so let's
Yep.
take a look here as we look at these charts. So I'm going to switch over to the Baidu chart right here. And what we're looking at is our cycle analysis. I'll just blow this out a little bit right over here, and we're looking at the side by side. Didn't want to do that. Let me just get back out over here. Okay, so this is Baidu on the left, and you can see it was up here at 354 back a couple of years ago, and then broke all the way down here to $73. Now, look at the cyclical rhythms in here. As you see, the cycle brackets are on the bottom, and you can see this low lining up right here and here and here and here. Those are all important low areas. And now we're in this area where it's coming up. Now, I want you to note right in here, that is our reversal scout. I'll blow this up for you right now for you to see. And what we're getting at right over here, when I point to this being bullish, is that there is a cycle that's bottoming right in here. So you can see the rhythms in here as you get into the second half of each cycle and money moves out. This is money flows, essentially. Money moving in, money moving out, money moving in and out. So Baidu here is looking like it has made its bottom and money moving in again. These two lines show you the really plus or minus 3 weeks from the ideal trough that we're looking for. And here's where the reversal scout points to the upside. Notice right over here where it turned down and it sent you into this decline, and here it's up. Now, you had a rally, hit the resistance, pull back. The probabilities of the third week being the high are extremely low. The probabilities of getting up here to about 129, 130, maybe this is about 136, are extremely high sometime over these next several weeks in Baidu. I just want to look here at the daily, and you could see beautiful basing pattern that's going on in here. Now, what is a basing pattern? That is when you have a higher bottom likely to form after have been in a decline. You can see lower bottom right here, lower peak, lower bottom in those cycles. And now you have this base forming as it comes down into support and getting ready to move up. That points up into this area right over here, which are the fib extensions that we're looking at here. That's about 127 to 132. So right now we are in what I consider to be a buy zone and buy timing. So you can see as that looks pretty powerful right there. Now, I want to be sure that you understand that we're under a condition here where the market's been weak. And the momentum in here is just starting to improve. So you might start out with a smaller position. I want to look at FXI and see how this aligns with this, because FXI is the Chinese market and Baidu is a Chinese stock. So when I open this up right over here, you can see that what we're looking at is a bottoming going on, or bottom due, with no sign of it starting yet in FXI, in the Chinese market, and the momentum still coming down. So you have to look at that with just a little bit of caution when you're thinking about trading this on the long side or Baidu. When I look here at the daily chart, you can see in here those cycle rhythms, beautiful, but while Baidu has a base forming, this does not. The momentum still negative. The slim ribbon PO still negative. Negative signals coming on in here. And we have a note here. All momentum is negative, and anticipating troughs means the smallest size trades. That's important here when you do this kind of analysis. So we're looking at an intermediate analysis that suggests that FXI should bottom, but it's still negative momentum and no proven bottom yet, which says keep your size small, even though Baidu, B-I-D-U, has got all signs that it is ready to move to the upside. I tell you, when I look at this, it's so important to do the sum of the evidence analysis that says to you also about position sizing. And this one says to me, stay small. It looks like a long side trade in Baidu. I'm going to turn this over to Arvi to do Oracle.
All right, beautiful. Thank you, Slim. Let's go ahead and pull up my screen. We'll look at the weekly and daily cycle analysis for Oracle. 1 second to load. Should see the chart of Oracle, weekly on the left, daily on the right. So you'll see right here, which is really why this is interesting. is you see that this formed a higher high right there versus that old high, and a higher low versus that old low. Based on that, we would have looked for this to move back towards this old high here at 127.50. But what happened is it actually made a lower high and then now has moved below that low at 99.87. What that says is this is very likely the high here. And we are then looking for this to overall pull back into this low, which is only due out in that May to June time period in Oracle. On the downside, we're looking for a move into this zone from 96.05 to right around $90, even into that late spring to early part of summer time period in ORCL. Now, if this were to somehow move through this old high right there at 117.67, that would say that this is a late weekly low, meaning that this low here has shifted out to the right, and that is that key intermediate term trough. Shift over now to the short term. So this period right here, you can see we have obviously moved down sharply. Looks a lot like this period right here, where we moved down, formed that bear flag, then rolled down. We had the same thing right here. We moved down, looked at this old low, forming what is likely a bear flag, and we're looking for this to also sell off into this low, which is due 1.5 to 118 here in ORCL. Now on the upside, we're looking for this to fail basically right around here, 106.29 to 108.47. If this moves through 110.64, then this would be one that did not work. And on the downside, we are looking for a move back to this old swing low at 99.87, and then we have this level right here at 96.02. Okay, so that's the look here in ORCL. We are looking for this to turn down shortly, and I'll go ahead and hand this off to you, Matt.
All right, great work, Slim and Arvi.
Thank
It's
you.
always fun to hear our team go through our trade planning process as we do our analysis and then convert that into the trade idea. All right, so I'm going to share my screen. And as part of my segment, I also like to just give you a little sense of the process in terms of how did I find my idea using any of the askSlim tools and services. So you should see the Charts Hub up on my screen. And this is an excellent tool. So if you're a level 2 or higher member, you have the opportunity to quickly and efficiently go through our weekly and daily cycle analysis and all of the symbols that are in our focus list, which is just an awesome assortment and variety of stocks, ETFs, and futures markets. And you can see here as I just scroll through, we have just an awesome assortment. And you simply click on one of the symbols and then it pulls up, defaults to the weekly chart. And then you can also look at the daily chart. And as I was going through the symbols, the one that caught my attention was FCX. So I am going to pull that over and we're going to step through the trading, the analysis and trading plan on FCX. I'm going to pull up my little sticky notes here too. So when it comes to trade planning, you want your analysis and your methodology to be able to answer some key core trade planning questions. And Arvi does this many times a week in our trade ideas service that we offer, where he will go through the analysis as we're doing right now, at times creates a video around that analysis as well, and then has a template where he fills out a very specific set of information regarding the trading plan. And that consists of our outlook period. So each one of us analysts today talked about our outlook period. So for me, as I look at FCX, I'm looking at an intermediate or slightly longer term outlook. So that would mean something like 3 to 8 weeks or even a couple months out. Once we identified our outlook period, you really want to match that up to the analysis that you're doing on your charts. So in this case, we're looking at weekly and daily charts, and I'll even go into the 2-hour to show some information around that. What is my directional bias? Obviously, if you're going to position your trade, you need to understand what your directional bias is as you do your planning. And my directional bias on FCX is bullish, and I'm going to step through that here in just a second. And then we want to identify our key levels, including, as you saw with Slim and Arvi, what's our reevaluation levels? What are those areas that tell us that analysis is something's changing and we either need to take some off or remove that position altogether. And then once you have done your analysis, it's really important to then say to yourself, do I have a tradable edge? Is the information allow me to put and execute a strategy around it? And then once you've done that, you want to be able to pinpoint what signals you need to say that that trade is a go and it's time to execute it. And obviously, always want to have our risk and money management rules in place. Okay, so there's the high level. Now let's get into the details. I'm going to pull over my other sticky note here. So why the bullish directional bias? As Slim and Arvi are talking about, we look at a sum of the evidence where we want to have our methodology put the odds of our trade setup in our favor. There are no certainties, there are only odds, and over a sample size, if you have a methodology that generates edges, you should ultimately become profitable, especially if your winning trades are larger than your losing trades. So as we look at the weekly chart, which I have up here right now, we have a intermediate cycle structure that now is warning positive. So we had a cycle low here, and when we made that next cycle low, we actually violated it slightly. So that would have been negative as we started this cycle for that intermediate. However, over the last several weeks in this new rising phase, it's been quite a significant advance that has actually now made 2 weeks in a row above that intermediate 78.6, which for us warns that this cycle structure now is shifting positive. So that's number one. Number two is our momentum indicator is firmly positive as well. So we have both cycle structure and we have momentum positive. And then also, if we expand out here a little bit, which I'll do in just a second, you'll see that the longer term patterns are also holding quite positively. So in addition to that, we look at time, right? Our cycle analysis gives us a sense of time. And right now we're still in that rising and really, if at all, just getting into some early peaking, but essentially still in an early rising a phase here, which suggests that if we have a positive cycle structure, that our translation for this pattern is likely to be positive, at least at the midpoint, if not a right-hand translation, which would then suggest that that peak comes later. So now if I back out here and just look at the zoom, if I zoom out here, you can see that this overall major pattern is still quite positive, potentially even putting in a bull flag here. So again, overall, the pattern structures, the momentum, very positive. So once we've identified that, we want to get into our levels, and we use a swing high, swing low techniques. And as I did my swing high, swing low techniques, I was able to identify some key areas where based on the patterns, we would likely see if this is to play out bullishly. So I've identified that here, an intermediate projection zone over the next several weeks of around 44.40 to 46.75. You can see that also is going to come back to retest that prior cycle high. And then what you would likely see is obviously some type of pullback. Now, what I'm showing here is a pullback that would be into the typical maybe 38.2 to 50% from that minor peak that would form, and that would come in the time frame. If I go over then to the daily chart, you'll see here that the daily cycle low is expected somewhere around 125-ish. So around that time frame, there would be a likely pullback, and then we would likely rally again. And the possibility is we either retest or we actually make another new cycle peak up to this longer term 78.6 extension. Now, what would invalidate this analysis or require you to reevaluate for sure, take some off, maybe even remove the position at this time, and this would change as the security continues to move up. But right now, if there was a close below this 36.74 area, then I would have to reevaluate this position or this trade idea altogether. So that is the work. Oh, one more thing to point out. On the daily chart, you can see that there was a daily cycle breakout. So that, as Slim and Arvi talked about, that some of the evidence is really what you want to look at to get your directional bias. That then helps you position that trade properly, putting the odds in your favor so that you can be on the right side for a longer ride is what we look for. All right, back to you, Slim.
All right, great. I love that. Be on the right side for the longer ride.
That's right.
It's we need to have that right on our front
Hats.
page.
Yes.
Great. All right, so I'm going to take the screen back here,
Yep.
and we will switch over and move on. We have lots yet to look at in here. So let's take a look here as we switch over from this very great trade planning segment over to our review of products and services. Matt,
Yep.
give the gift.
Yes, we are. At askSlim, we are really pleased to be able to offer our best specials of the year during this time, during the holiday season. And as Slim has mentioned over the past several weeks, we have several opportunities, and I'm going to step through those 3 levels. But these are 3-month memberships. They're non-recurring. So it doesn't automatically recur, and it's a great way to take a trial, to get a feel for our methodology, to really get immersed in the process that we use. And then on top of that, to be able to see, as you did today, us put this methodology into practice, into action, into real-time trading, so that you can see how that works, that whole process. It's not just us doing analysis, it's also us then being able to put it into motion and see it in action. You can give this to someone who loves trading, who is maybe looking to expand their process into technical analysis, or already does technical analysis and wants to have another cross check. I mean, we're going to save you a ton of time as the analyst team here, 4 of us, just puts in a tremendous amount of effort into these charts. And really, I mean, for all of us here that are also traders, each one of us saves each other time as we do this work for all of our members, and obviously then for ourselves. So you're going to not only save money with the special, but also save a lot of time that you can use our work. Give that gift to yourself. So if you are currently a member, this is a chance to upgrade. And if you upgrade, you're going to get the discount plus. You're going to get the special gift card, Amazon gift card, as Slim mentioned. So if you get the gift, we're going to give you a gift back. So our level 2 membership, it's 35% off each one of these. And you, instead of it being $59 per month, it's $38.25. Plus, you're going to get the Amazon gift card for $20. Even if you're an international member of ours or a YouTube subscriber, we are utilizing the Amazon international sites to fulfill that. So feel free to take advantage of this. Our level 3 special is the same thing, 35% off, significant discount, plus a $50 gift card. And then our top tier, if you do use the Thinkorswim platform, you'll have an opportunity to really get under the hood with all of our proprietary studies, charts, indicators, grids. It's an amazing opportunity, literally, to get in and see what we do every day and get under the hood with our proprietary and custom information. All of the tools that we showed you here today, you will get with that level 4 membership. That charts hub that I showed starts with the level 2. Level 4 gets you, everything that we have in 1 through 4. And you also get access to our Discord and our market condition monitor. So a lot that comes with this, and you have a chance on Discord to connect with the analyst team as well. If you go to askSlim.com, I will show that where you can find the landing page for our Give to Gift. You'll also see here, as Slim mentioned, we have, if you haven't participated with us in any form yet, you can get that free S&P analysis, short, intermediate outlook. It's really great technical information on a daily basis. But you click on the Learn More button, and that'll take you over to the landing page for our Give the Gift. And you can see the additional information that I already covered in that segment. All right, that's what we have for Give the Gift. Back to you, Slim.
Well done, Matt.
Thanks, Art.
Okay.
All right.
All right. Good job on that, Matt. All
Yep.
right. We're going to move forward. I know everybody is just waiting for us to be able to show more analysis. Here is our Q&A. And I'm going to take the first part of that, which is looking at any of the futures in there. And then Arvi will take over, and he will look at anything in the equities or ETFs that he's going to share. We're going to take about 15 minutes here and do a number of them. I see for me, I have a question here. First of all, what is my outlook for Q1 2004? You're going to have to watch the big picture analysis. Right now, that's scheduled for January 3rd. So Rashmi, I know that you're going to watch that and be all excited by the amazing analysis I'm going to show for next year. So thanks for that question. Also, Mr. Seco says, Slim, RV, Las Vegas, see you there in May 24. Okay, so let us know where the party is, and I'll be looking for the airplane tickets that you're sending, and we'll be really getting ready to party. So thanks for that. Really appreciate that. So we have a question also on the bond market and VIX. Gold, bond market, VIX, copper. That's what I'm going to take here, and then I'll turn it over to RV. Okay, so let's switch over to my charts. If I can get this. All right, I'm still on Baidu from the earlier analysis. Let's start out looking at gold / GC. Remember, what you're looking at in here, what I'm going to show later on when I do the indexes, is the market on that we show, the analysis that we show on a thinkorswim platform. That's where we do our charts, where we have our proprietary indicators. So here's the gold market. We're looking at the really beautiful look at where periods of risk show up. Those are those yellow areas on the chart. The reason that they're yellow is because we want to highlight when there's a likelihood that money flows will be moving out. And you can see how each of those, where you came into the end of these cycles. Now you see a minor cycle and a dominant cycle. When they're moving down together is when you have the highest risk. That's usually when the slim ribbon turns negative. When the slim ribbon PO shows you red, that's what happens. And right now you could see that correction came really late. That is the what we call a right-hand translation. And we'll just open this up for you to see a little bit more here. I'm going to go to the weekly over here and open that up. And what I want you to see is that this is really a breakout past the all-time highs. And now we're just getting into this corrective period here, which goes out into the early part of January. This one right over here on the daily goes out to the about the end of January. So you can see here, ideal trough looks like it's around January 25th, plus or minus. What that says is that you probably get a rally here and then pull back, and then you'll make this low over here, which is the minor low right there. And then you get into this period of the next rally. That will be this cycle over here on the daily that is barely visible. So you get the rising phase out over here, which isn't shown yet, the rising phase here, which is very clear. And what we're looking for is this move up to, this is 2190 on the 78.6% fib extension. This right over here is close to 2300. That's what we're looking for here on the daily chart. These fib extensions are visible now. I put them both in there. One is from the daily, one is from the weekly. I'll just highlight this right over here. So these are your projections. The minimal projections is up here around 2190, all the way up here close to 2300. So we're going to be looking for a much stronger gold market in the first quarter of next year. And that is, a little glimpse of what we'll show in the big picture, though I look at monthly charts in the big picture analysis. So that is a look at the gold market. Choppy probably over these next several weeks, setting up for another surge likely into the in the early parts of next year. Copper market, this market has really been improving. Of course, this is often called Dr. Copper. You can see we're having issues where this platform is a little slow right now. So that's why it's taking so long. I'm going to blow this one up for you to see so you can see the cycle analysis in the copper market. This is just outstanding. When you look at this, you can see that there is a cycle in here. This is the dark blue are the dominant cycles. The dotted line are the minor cycles. You have two minor cycles making up the dominant. This is called the harmonic family in here. This low right over here got barely taken out right over here, but similar to the analysis that Matt showed, and this is why, because there's an alignment between copper and FCX, you see we took out this low, which is negative, but then you take out the 78.6%, which is repairing it. That's like FCX, right, Matt?
That's right.
So that is why you're seeing the similarities in there. Right now, the projection is up here to this last cyclical peak right there, which is around 402. I wouldn't be surprised to see this come down a little bit over here out sometime into next year, but this could go much higher. See this peak over here, that's at 435. There's no reason why this cycle can't blow through these resistances and get to 435. Here is your daily chart right in there. Look what's going on in here. First of all, you can see the slim ribbon right over here where it turned positive. The slim ribbon PO is green.
Great
And
signals there.
these signals here are just fantastic as you get the momentum signals that it's about to turn up again. And those just worked fabulously. Slim ribbon positive here. You can see we got above this last cycle. That is positive. When you do that, got into this weekly resistance area. Fib extension to 61.8 here around, let's call it 397, 398. A likely little corrective period right over here, and then off to the races on the upside here in the maybe second week of January, third week of January. So copper looking exceptionally good in here. And of course, that's all about interest rates coming down. It's all about the prospects for the economies in the world getting better. And these metals get ahead of that. That's why I said gold is likely to take off on the upside also, because the Fed never learns a lesson, and they'll ease beyond or earlier than they need to, and then they'll probably find out that they're wrong. But in the meantime, this is positive when you look at that. Now we have a question on bonds. So when you say bonds, to me, that's a 30-year bond. You could be looking at the 20-year, which is TLT, which is an ETF, or you could be looking at the 10-year, which is a note. So I'm not exactly sure which one you're asking about. But let's just start out by looking at TNX, which are the 10-year yields, and maybe that's always the best place to start when you're doing bond market analysis. And you can see in here what we're looking at. I'm just going to show you the side-by-side right over here, is that there is likely some timeout here to the trough that's due in the third week of January. Now, here's where that trough is due here also in the third week of January. We thought that it would get down only to about 4.06, which was right around this line right over here, right in the middle there. And you can see it got weaker. And you had this really weak translation on this cycle where it went up 3 days and then came down. This will be updated for our level 3 and 4 members, for our chart members, in the next several days, because this is a slight change where we identified the translation because this ran so much past the bottom. And now this points out over here into the third week of January. Here is this low due over here on the weekly in the third week of January. This says the bond market is likely to stay on the firm side, or the yield market stay on the weak side for probably another, few weeks. And then after that, we get this move and rebound on the upside over here with the Treasury futures trough due in March. In other words, when I switch over now to let's just look at ZNs, and I'll keep this in the notes since I was looking at 10-year notes. It says to me that there's likely to be a decline and a trough in the 10 years. And we'll just blow this up here. And you can see in here that these cycle patterns are pointing to a downward move in here into these rising supports into this period in March. So there's a trough due here in March. There's a peak due in yields in March. And this is the time frame when you should get a move up in interest rates, a move up in the dollar as a rebound, and maybe that some softness out in the metals, giving us what I think is a buying opportunity. Now, the original analysis was that this would come back down to these lows. This is giving us an indication, unless inflation picks up and there's this very sharp decline, that this is going to be an oddly formed dominant cycle without the last minor cycle making a lower bottom. That would be a very unusual shape, with still a possibility that this ends up coming down into these lower levels out over here. But that would really take some surprise that the Fed is not going to be able to cut rates the way everybody is looking at. But either way, what we're looking at is a decline in here in the notes in the bonds out into that March timeframe, which aligns with the rally in yields out into that March timeframe. So that's my look at the bond market. And we had a question on VIX. I'm going to look at VIX right over here. You asked for the future, which is /VX, but I do my analysis on the cash. So you can see in here on the cycles what we're looking at right here. And that is the daily. Okay. So we had that big uptick in the VIX, which was really out of place on that panic that we saw here. I saw on the daily chart. That says to me that there was some kind of a shift here. And the low here on the weekly chart that we're expecting in the VIX is already in place. You could see the minor low right over here, and then that upward tick. This has got some change in there when I'm looking at that, because that bottom came very early. And I'm going to have to identify now where that bottom was. We're likely going to get some pullback in here and then moving up again. But this pattern on the weekly right over here is suggestive to me that we're going to go into a period of maybe several weeks of higher implied volatilities. And that's speaking to the fact that we think that there is a correction coming out in the stock market that I'll be talking about fairly soon. So this analysis here in the VIX needs work, some revision, because you could see we got back up to that level right over there and slightly surpassed it. That means that 1181 was an important low level. And outside of some potential of the VIX pulling back in here, it looks to me like we're going to get somewhere up into the teens, maybe test that 89-day moving average right around 15. And that would come, I'm guessing, sometime between now in January. So that's a look at all of the futures I've been asked for. Anonymous attendee, you must have come in late. You're asking for the Russell. I'm going to show the Russell as we get into the end of the show when I look at the indexes. Arvi, I am now going to turn this over to you.
All right, Slim, thanks so much. Let's go ahead and jump into some of your stock questions. We'll pull up Tesla first. Give it 1 second to load. Okay, so you should see the weekly and daily for Tesla. Now, this is actually a bullish overall pattern here. You can see that we have now formed this higher low right there versus that old low. So we would look for a move through at first. This key 78.6 fib at right around 277. If it were to close over that, then it would open the door to this old swing high at 299. So that's what we are looking for in TSLA, is first a close over the 78.6 and then a retest of this old swing high here at 299. If we see a close over that, then we will be looking at obviously higher levels, which we will add to the chart. But it really needs to prove itself and needs to move through that 78.6 first. Jump over to the daily time frame. Now, what's interesting here is there's also a higher low basing cycle forming here as well, with a daily low that is due right around year end into the very early part of January. So we'll be watching for a small dip into this zone here from right around 239.40 to 226.5 or so. And then if it can form a higher low around that area, turn back up as we have drawn in here on the upside in TSLA. So a bullish, both intermediate term and short term cycle pattern is in place. If we go ahead and jump over to MGM. MGM is one I have overall liked. Let's pull over the intermediate term. We did form our low right there, and then we have surged to the upside. Overall, we're looking for a move towards that 78.6 on the intermediate term at right around 47.70. And you can see that there is a low due right there, right around that 2.5. So what we'll be watching for is a little flag here, and then for this to turn back up like that. So that would be an ideal setup there on the weekly in NGM. If we shift over to the daily time frame, there is a short-term low that's due right around 1.5 to 118. Again, higher cycle high, higher cycle low. So what we are looking for is for a higher low to also form here. And you can see on the downside, we have this zone right here, 43.12 to 41.5. We'll be looking for that to hold, and then for this to turn up again and then roll over after that into that next low, which is due right around that 215 low, so it should be in sync with what's going on this minor half weekly cycle. So all this is really lining up well, and it would say that this would likely make a new high and then curl over after that. Okay, so that's what we'll be watching for in both the short term and intermediate term in MGM. Jump over to the SMH. This has run quite a ways here at this point. Let's pull over the intermediate term. You can see we're already in our zone on the upside from 169.73 to 178. This is what we were looking for. We're there. If we move through this old high right there, we have a fib all the way up here at 190. So still overall clearly moving higher, not seeing any clear highs as of yet. Shift over here, you can see that there is a daily low that is due 110 to 123, and on the downside we have a zone from 168.5 to 164 or so. We'll be looking for that to still hold on the downside, and as you're seeing here, higher cycle highs, also likely higher lows, so that would indicate still higher prices coming going out into the end of January into early part of February. Go ahead and move over to Starbucks. I don't have anything on NIO or the other one you asked. I apologize about that. Let's pull up Starbucks on the intermediate term. There's a low here that is due 212 to 318. This is very likely the high here. So we'll be only really looking for lower highs and lower lows. You can see that we have a 78.6 right around 93 quarter or so. And then we have this old swing low at 89.21. So those are our levels here on the downside, and on the upside, you can see we failed right there versus that 61.8 fib at 105.30. Shift over to the daily time frame. You can see this is clearly giving us a move on the downside right here. Bearish move right there. You can see it beautiful. And right here, we're really only looking for, again, lower highs and lower lows going out into this low, which is due 19 to 123 in SBUX. On the downside, we're looking for a move down to 92.60 to right around 91.16. If this were to somehow move through this old high at 99.01, that would say that this has that this has actually formed a late low here. Right now, we aren't seeing that as really something that we would be looking for. Rather, only lower highs and lower lows, and we are actually watching for this as a short side trade idea. It is on our list. Jump over to MMC. I actually do have MMC. Also looking at this as a high that has formed. Let me get that text over so you can see it. We had a low that was due right here. We did make a new high, and then we have failed sharply and are looking back at this low at 184. Our next key intermediate term trough is not due until 6/23 of 2024. So a long time here in MMC. Jump over here. You can see that there is a daily low that is also due 13 to 118. We'll be watching for this to form a lower high and then turn down again. That is really what the highest odds indicate at this point in MMC. Okay, so that's the look there at the stocks. Slim, back over to you.
All right, fantastic work there. I want to let everybody know, in case you don't know that Ari does the Future Speak show every Wednesday and goes through all of the futures, 24 different charts. Actually, it's 48 because it's weekly and daily, looking at all our proprietary indicators. So if you're interested in futures and in the indexes to see that analysis, Future Speak show, that's for level 2, 3, and 4. Is just a fabulous show. It's a tag team by RV and I, because I bring I do all of that analysis on those charts. I then send it to RV. RV reviews all of my work and then puts it into the way he wants to present it. And it's just a fabulous show. So I think RV and I do a great job on that, and really want to encourage you to watch that if you don't normally do so. That's our Q&A for the day, and great work for everybody. Matt, there's one more piece in there. We had a question. I'm going to turn that over to you.
All right, thanks, guys. Great work. Yes, very quickly here, there's a question regarding do we have the trade planning checklist that I reviewed? So in the askSlim membership, I'm just going to share my screen very quickly here, because it is important that our members see this, and those of you that are interested. So from levels 1 to 4, we have an area called My Trade Ideas, which is part of our trade planning suite of services. And you go in and you click Create New, and you click Create New Idea. And then there's that template, which is very similar to what I reviewed and Slim reviewed and Arvi reviewed. And this is exactly what Arvi puts together when he does post his trade ideas. And so he steps through the entire logic of our analysis, our technical notes and summaries, the key levels, the bias, so on and so forth. So yes, as premium members, levels 1 through 4, you can build your own trade ideas and you can save them for yourself. So it is something that you'll want to be able to review and utilize. If you don't, if anything, if you don't do it on every single idea that you create for yourself, it is just great discipline to use it and remind yourself of from time to time. The exact checklist I put together, I'll make sure to add that into our resources area over the next week or so that we have that additional information.
All right, thanks a lot. That's
Yep.
great, and I'm sure that some of our members were not familiar with that,
Yep.
and will then be able to go make use of that. So we have
sure.
so many things on our website, it blows me away. So that's great. All right, stock market analysis and projections. First, some important information. Do read this slide. It talks about our approach to the markets and about you using our information and how you do that. This is always important for you to read. One more thing before I get into the stock market analysis. I want to remind you that we share our stock market analysis. That's the S&P 500 analysis every day. You can get it in your email. If you are not an askSlim member, this is the way to start. Go to the front page and you'll see it says Get Free Daily S&P Analysis. Just put in your name and email address. There's no credit card. There's nothing. And we never share this information. Nobody's ever going to have your email address because we keep that locked up tight. And this is just a way that you can get our information daily. A great way to start with us. And one more thing. This is the askSlim Day Trader dashboard. This is a look at it at the end of Wednesday day, of course, which was a big down day. I want you to notice in here that this is just a wealth of information. There are 3 things in here that we provide that are amazing. This is the impulse monitor, which tells you the present energetic impulse in the market in the 4 different indexes that we look at. This is the SI intraday chart grid, which Matt does every single day. It's fantastic information, support, resistance areas, acceleration zones, when it's likely to move down or when it's likely to move up through a particular area. Look how it got perfectly through the acceleration zone here. And when the reversal came, this reversal scout turned down. And this is one of my favorite strategies, the 8-minute strategy. And this puts you in this trade on the short side very, very early. There was probably 60 points in this downside trade right over here in the S&P 500. This is just unbelievable. And I did a training on this. It's training number 5 for our members. You become a day trader member and you'll be able to watch that training. And we have a version of it up on YouTube that you can watch to see how to use all of this. This puts you on the right side, prevents you from being on the wrong side and raising your batting average, your wins and losses. So if you're a day trader, I mean, this is it's so great for you to have this. And as a reference to the market energies and my favorite strategy, one of my favorite strategies. So go to askSlim.com to the day trader on the product page. You can click on the information there or write Matt at askSlim.com. And he will tell you about the askSlim Day Trader dashboard and how you can get that. That's really important to share with you. If you are a day trader, you're going to love this. All right, stock market analysis. We're going to take a look at the level 4 chart grids. And I'm going to move that in right over here for you to see and blow this out so you can see. Our level 4 members get this every day. It looks like a mess, doesn't it? Those are our level 4 chart grids. And this is the way that they receive it. But if I blow this up, each one of those, it becomes all of our work and all of our analysis. So, and we update this regularly all of the time. This is the weekly on the S&P 500. The proprietary indicators that are in here are basically the reversal scout and our cycle analysis. You can see in here the cycles are pretty good. These blue vertical lines are showing you where the cycles actually bottomed, and this is where the ideal bottom was. Here, this one bottomed a little later, this one bottomed a little early, and then this one gets a bottom that's a little bit later. This is where we were looking for that October low. It was down 10.9%. We talked about the cycle trough coming late October. It actually came in the week of October 23rd. Then we had the reversal scout turn upward, and it has been in powerful upside momentum ever since. My target for the year in what I thought was going to be a bull market year was way, way down over here. So it was not anything like what I had expected at the beginning of the year, except that we thought it would be a bull market year. But our indicators keep us on the right side and keep telling us that we have to look at what the market's telling us, not what we anticipate. You know, that's what's really so important, is that look at the market, listen to the language of the market, and make your decisions based on what it's telling you. You'll stay out of trouble more often than not when you do that. So here's where we are right now. There is likely a minor cycle correction coming right over here. And I think this is important to look at this because this points out to the 2nd to 4th week of January, maybe the 1st week of February out here, where there is likely a pullback. We have moved up here into this fib extension area. Here's your all-time high, 48,1862. You can see we're just below that, where the Dow and the NASDAQ did make another all-time high. So we have what is considered very bullish conditions in here. This correction over here, which would be this mid-cycle low right over here, you can see what happened here. It came down, a couple hundred points, and then it blasted up to another high here. This was only like 140 points to the downside in that minor cycle, and then blasted back up to a high. That's really what I expect will happen in here, is that you will get this minor cycle low right here. It will blast up to another high. If it doesn't take out the all-time high first, it's very likely to do it here. That upside projection is 4,900 right there, which would come sometime early part of the year that we're looking at. You can see this upward channel in there. It's pretty nice and likely to get you into this higher areas of the fib target zone right there. Here's your yellow period of risk. This period out over here in March, April, and potentially into May could be a very serious downside correction. It would be, if you look at the alignments right over here, you can see this one was enormous in a bearish market. This was still 4,200 down to 3,800, 400 points in the S&P. This one over here moved down from 4,600 to 4,100, 500 points in the S&P. Of course, you're getting from higher levels. I would expect wherever we get to the peak in here, the decline will be at least 500 points out into that May period. So that's a little bigger picture than I wanted to look at right now, but still, I think because I have that yellow highlighted area there as a period of risk, that we have to be looking at that. When I look at the monthly and the big picture analysis, we'll be looking at this again. So when I switch over now, remember I'm advancing on this right now on these charts. You can see in here that it gets up into this resistance zone between that weekly fib extension right over there, a daily fib extension here, and the all-time high, and the next fib extension right there. This is really a thick area of resistance and looking for a corrective period. You could see where these minor cycles and dominant cycles come down together. You get declines. You had a sharp decline here. You had a pretty sharp decline here, right there, because they came down together at the same time. That's where we are right over here. I was looking for at least 140-point decline here from whatever this peak is out into this support. This top of this support from the weekly chart is around 300 points down, 250 points down right there, but it might hit this dominant support right there at 46. That would be 46.17. That still could be as much as 150 to 200 points on the downside here. This is where we're going to start looking for the top, a minor top to be formed, and then come down. You see that big down day on Wednesday? That's showing you that it's capable of some air pockets right now, and that might be a sign. You can see when the market peaked right over here. Let me just get my pointer. See that big down day right over there, and then it came back up. I mean, that's an indication that you're starting to get some selling coming in here. You could see the same thing happened here, and that's what happened right over here. So we're in an area here that we could get a peak. Remember, we are in the holiday season. It's going to be slower. Very funky things happen when you get into Christmas, New Year's, and into the first week or couple of weeks of the year as money really starts flopping around. And so you could get some pretty good sized moves. I'm going to call for a decline out over here into sometime second to third week of January, then setting up the next upside period here where we could go to 4,900. So certainly not a bearish call I'm making in here, just for a pullback, 150, 200 and something points, and then up again. Note on the bottom here, this is the option bias indicator giving a top warning right over there as it got very, very overbought. It is now turned, getting a couple of neutral readings right there, but that warning often does bring you a peak. Now we're going to start to move ahead faster. Here is your daily, your look at your daily momentum conditions. This is the slim ribbon and the slim ribbon PO and the area chart. This tells you still very bullish conditions right over here. This is your 2-hour chart where we're looking at the askSlim market condition indicator on the bottom. It tells you when you're in here in the really above 80, that this is very, very powerful market. You could see the slim ribbon PO. Look right over here, this signal where it said momentum's going to resume on the upside. Wham, really moved up right over there. It went neutral right over here for a couple days, and now it's turned positive again. So key here to watch and see whether or not this turns neutral or red. On the 2-hour chart, that will give you an indication and a heads up that we are getting into that correction. Here is the NASDAQ. Looks a lot like the S&P 500, except it went to an all-time high. This pullback over here, very likely to get into this 15,800 area if we are in this peak as expected. It can go all the way up into the 18,000s potentially. This is 17.4. This is 18.3, 18,300. And maybe what happens is that this gets over here. I'm just going to duplicate that. And out after this correction out into April is where it does that. And then this is the period that's strong out into the summer. So again, this is a big corrective period out over here in April, March, April, May, and then potentially the moving up to what might be a bull market peak. I don't want to give away so much. As we look into the big picture analysis coming up at the end of the year. So we're going to look for a pullback into January. You can see how that lines up right over here. These are fib extensions from the first minor cycle. You got this big decline Wednesday trying to come up again, but I think it's going to run into trouble. Here's your top warnings right over here on the option bias indicator. So if you were trading the option in the index options and you were trying to be short the market, this was telling you don't be. This is telling you that there is a very powerful period in the market. This now tells you that it is way overextended, and I'll show you another chart on that in a few moments. When we look at some other ways to see if a market is overbought or oversold. Here's your NASDAQ powerful momentum conditions. You could see giving you this upward arrow right there saying it's not done. Maybe between Christmas and New Year's, we get a little more on the upside. Here's your 2-hour chart. Look at that 2-hour slim ribbon PO. Just screaming at you that says a momentum resuming upside, resuming upside, resuming upside, and the askSlim market condition indicator trading right now at 93. This is just towers of strength that we're looking at here. This is, remember, on the 2-hour chart, and gives you this information for those people that are swing traders. I mean, this would be used if you're using swing trades over, a few week period, couple week period, or if you're a shorter term trader, this would be for your directional decisions when you look at this, or your sizing, because that's what you would do, only go maybe as far out as a 2-hour chart if you were a much shorter term trader. That's your NASDAQ. Here is your Russell moving up towards the major 50%. That is only halfway back from the whole bear market. So it has been a lot weaker. Again, this cycle says comes down over here, in this case, out into late February, early March, looking at this, and then likely up again with potential to move up here to these areas of this fib extension at 2132 to 2143. That's where we really ultimately would target this upper track right there. If it really stalls here and comes down a lot harder, then the area it's in now is going to be bigger resistance. Here is your daily chart. It looks a lot like what we've been looking at. Shorter cycles over here, looking like it's going to pull back here into the 1st to 2nd week of January, then turn up again. And then this next cycle over here points to, and I can highlight that, towards the end of January. So that might be a choppy period over here for the Russell as it starts to make a bit of a corrective period. Look right over here, these warnings right over there. Now, if you wanted to be a bear, this was telling you all the way here, this is August through November. This was really giving you negative indications. See the bottom warning here where you got those 3 orange dots? Just amazing. It bullseyed that right over there. Here's your top warning going on right over here. Sometimes these extend out, especially in the holiday season. You would expect that, but then we think the market is going to get into some corrective period in here. So that's a look at the Russell. Here's your Russell on the daily momentum. Slim Ribbon PO gave you that signal right there. Momentum is likely to get back to the upside. You could see gorgeous. Look at these negative signals right over here. Slim Ribbon PO telling you momentum to move to the downside. Slim Ribbon is often a resistance or support. You could see it getting the resistance right over here. You could see it getting the support here. By the way, Slim Ribbon, that Slim Ribbon by itself is a free indicator. Write to Matt if you want to know about how to get that. So free indicator, the Slim Ribbon. Slim Ribbon PO and the market condition monitor. Those are proprietary indicators only available to level 4, as is the market condition indicator, which you see right there. Look at that 95 reading on the bottom on the Russell. Look at the Slim Ribbon here on the 2-hour, positive all the way there. And every one of those momentum signals right over there, just absolutely fantastic. Telling you momentum was very likely to go back to the upside. Just a great look there as you see the Russell. So that is a look at the stock market. You can see that what that's looking at is conditions that have been super positive. Our indicators have been super positive. The resumption signal's been spot on. And the cycle analysis structures have been positive. So regardless of, even if I say the market is vastly overbought, that it is incredibly overpriced, it doesn't matter, because we are agnostic analysts. And we're going to look at this in a way that we're listening to the language of the charts, the messages from the market. We preach that. We do that. Everybody on our team does that. And whether we have bias or not, it doesn't matter. My number one bias is looking at what the charts are telling us. And I think that is what is ultimately important. So let's look a little more at what charts are telling us as we look at overbought and oversold conditions. These are 2 very important charts that we're going to look at, because we're looking for a correction, just a correction in the bear market of, in the bull market of like maybe 3-4%, maybe 5%. That's very small. Take a look here at this chart. This is the S&P 500 overbought or oversold conditions. Looking at this from going back about a year and a half. It's a 2-hour chart that this is in. So the reason that's important to say it's a 2-hour chart is because the standard deviations have a look back period of 2 years. That's what we're looking at right now. So the middle one there is your linear regression line. It takes 2 years worth of data and takes the best fit for that 2 years worth of data and builds it. Then what we do is we put in a 1 standard deviation line and 2 standard deviation lines, whether it be to the upside or to the downside. Now, on the bottom, I put in the disparity index, which essentially is showing me the percentage away from the 13-week moving average, which is really important. So remember, this is a weekly disparity, overbought, oversold conditions, looking at standard deviations. Look what happened over here, where it got down to about 8% below the 13-week moving average, got into this area where it was extremely sold, and then you had this upward turn. You see where the disparity index began to turn up. That's where it gave you that signal right there. Lost my pointer. Let me just see if I can get it back. Okay, so here you could see where it got overbought. This is approximately 4 to 4.5% above the 13-week moving average. And look over here. So these only got up to the linear regression line and then turned down. So it's about getting up to that amount over the 13-week moving average. And then you got these corrections in here that you can see. This was, still sizable declines or pullbacks in there on those weekly charts. But look what happened right over here. When you got up over 1 standard deviation and it held up here for a little bit, there were 3 downward signals right there. It took a few weeks for this to turn down, but it got up to about 1.3 standard deviations right there. Look where we got up here, about 1.7 standard deviations right there, getting up to the highest level distance between the price and the 13-week moving average. That is really giving you a sign that the S&P 500 is about as extended as we've seen in a couple of years. 1.7 standard deviations, getting up about to 4.6% above that 13-week moving average. Does it get any clearer than this? I mean, on top of the cyclical patterns pointing for a decline, a pullback into sometime mid to late January. This shows you, along with the option bias indicator, the conditions are not really great for the market to continue to go up right now. They're much more in shape for the market to have a pullback. So that's a look. Now let's take a look at the Russell. Why is this different? The Russell 2000 is overbought. It's now at 8% above that weekly moving average. I didn't put those arrows in there, but you don't really need to see it. Why are these standard deviations ticking down? Because using all of the information over 2 years weekly charts, all of the data is equivalent to a decline. So even though the S&P 500 is moving up, the sum of all of the data on this chart is still moving down, and you can see that as you look at here the linear regression, which is that 0 line in the middle, still moving down. Look what happened here when it got up to 8% overbought. The market had the bull pullback. 8% overbought, a big pullback. 8% here above, remember, that moving average, getting up to 2 standard deviations. You've got to really say, the Russell has been bought like crazy, but there is certainly an indication here that there is a reason to believe that there's going to be a pullback. Don't hear me saying the end of a bull market. I'm not. I'm saying there's actually a buying opportunity coming, and the market is very likely to have a pullback into January. And I love this analysis. Remember, this is askSlim charts. Level 4 members, if you're interested in this chart, write to me and I'll send it to you. Level 4 members only can get these charts. So that's it. The look at the overbought conditions, multiple time frame analysis and projections in the S&P 500, NASDAQ, and the Russell on our Level 4 member live chart grids, plus very unique look at overbought, oversold conditions. Wow, we have done it. What a show. We're running an hour and 20 minutes right now. So this has been just jam-packed. I'm really excited about what we did. don't forget, you can learn from our team of pros. If you're new, get the Snapshot Lite, and you'll start to look at the things that we're doing, or give the gift of askSlim, levels 2, 3, and 4. Can you tell how excited I am, team?
Oh my gosh,
That was
you're
awesome,
like the
Slim.
Nolan Ryan of technical analysis. You get stronger as the innings go on.
Wow, yeah. I thought that was going to be a good one. So
That was
I
a
would
lot
call
of
that
fun.
one, you call it a Nolan Ryan, which means to probably pitch the no-hitter. I want to
That's
say
right.
I hit a home run. So
He got stronger as the game went on.
That's
yeah,
right.
that was great.
Great stuff, Slim.
All
A lot of
right,
fun.
fantastic. Team, you did an unbelievable job. I can always count on you. Katie, if you're watching this, we missed you. And want to remind everybody that next week is a semi-holiday for askSlim. As we're going to have a reduced amount of stuff going on. There will be no videos next week. Unless that you guys are planning on something up in the Discord or anything like that. But there'll be no public videos for sure. There'll be no Future Speak. Market Week will not be around next week. I personally want to wish all of you a very Merry Christmas if you do celebrate Christmas. And of course, a Happy New Year or a happy holiday to all of you. I hope that you're all safe, and wishing you the best for you and yours. Team, you got anything to say?
I think we've said it. It was an awesome show. We wish everyone happy holidays and the best of everything.
Happy holidays, guys.
All right. See y'all.
Cheers.
Bye. It looks on my screen like the webinar is still running.